Hi dear traders and investors, today is Tuesday, October 3. I'm ready to present you a fresh market review prepared for InstaForex. My ambitious trading idea for the euro-dollar pair has worked out well. The instrument tumbled and updated a one-year low. The profit-loss ratio was 1 to 10. Let me show you how everything happened on the chart. Before we discuss our chart, let's look up at the economic calendar. China is celebrating the national holiday for the whole week. The Australian Central Bank kept the key interest rates unchanged. The report on US job vacancies will be released later today. A series of economic data from the US will be published on Wednesday. Don't miss the services PMI. Unemployment claims will be available on Thursday. The highlight of the week is certainly the US non-farm payrolls that will be on tap on Friday. So stay alert and be ready for a buzz on Forex. Now let's go. The first chart is about gold. The metal has been following a strong downtrend amid the US dollar's advance across the board. Such trends were triggered by growing expectations of more rate hikes after Powell's forecast. The market is betting on the dollar's strength. The stock market is also taking a nosedive. Traders are seeking shelter in the greenback. Let me show you interesting levels where gold is heading for. Here are the lows of the spring of 2023. Gold has bounced off these levels lots of times. Support is seen is about $1800 per troy ounce. I expect a seesaw at around these levels. The buyers will enter the market and then the price will plunge. I've told you there's enough room for a lower fall. The price could tumble even as low as $14.46. Obviously, this drop will not happen tomorrow or in a couple of days. Still, we should foresee this scenario. I want to warn reckless traders willing to open even small long positions now. I urge you to be cautious. You might lose a few $100. Make sure you sell a stop loss. I don't see interesting technical patterns. I know that some traders want to buy gold at a swing low. Great. I wonder where we should hide our risk. We could set a stop loss, okay? What about a take profit? My idea is either to trade following trend or wait and see. Now let's discuss the euro-dollar pair. I'm pleased about my result I earned from short positions. The profit-loss ratio was 1 to 10. I planned short positions on the 5 and 15-minute timeframes. Today, the euro-dollar pair updated a new year low in the Asian session. Now a modest upward correction is going on. Anyway, you take profits on short positions should have been activated. A lot of traders believe that now the euro will sharply reverse upward after a strong bearish move. In practice, when traders think that the price has bottomed out, the asset goes lower to the second or third bottom. I prefer to trade following a trend or according to the swing strategy. The pound-dollar pair has been going down. I expect the bear trend this week. I deliberately picked a weekly time frame because I want to dispel your buying fantasy. The sterling has been falling since midsummer non-stop. If you think that you've grasped a reversal in 1 minute time frame, please check a weekly time frame. These are no signs of a trend reversal. I see 1 year low downward luck in the euro's case. I won't be surprised if the pound reached there, so you could trade during upward corrections like it was on Friday. The dollar-yen pair has been rising amid the broad-based strength of the US dollar. The Bank of Japan is sitting on the fence. Meanwhile, the instrument is approaching the psychological level of 100.00. I don't have any interesting ideas. Everyone is anticipating that the Bank of Japan will eventually intervene. Still, the regulator is incredibly patient. We could wait indefinitely. Candlestick analysis shows a bullish pin bar. I don't see any signs of a swing high. If you want a trend reversal, you should wait for sell impulses. There were such impulses last year. The Bank of Japan's interventions were followed by retracements and three-wave structures. The current situation is no way similar. The AUD-USD pair is violating all rules of the price action strategy. The instrument has left several levels upwards and a pin bar last week. Nothing changes. Today, the Australian Central Bank maintained the cash rate. If it had been raised, the Aussie dollar could have broken its highs. I remind you that the euro-dollar pair is the most technically predictable instrument if you trade according to the price action and swing strategies. The rest of currency pairs are hard to predict in terms of technical analysis. That's all I wanted to tell you today. Good luck and see you later.